The 11th of June 2025. So what's the news events today? Right, today I want to share about Ethereum's resurgence and institutional momentum. Now, so far we have seen institutional inflows and ETF demands for Ethereum, right? That was something that we have seen lately. The Ethereum ETFs have recorded nearly 3 weeks of consistent daily net inflows, reflecting steady institutional demand. In fact, Ethereum Spot ETF saw 16 consecutive days of positive inflow as of early June. Over the past 4 weeks, these funds have added about 97,800 ETHs, marking the fourth straight week of net additions. Now, this brought total holdings to approximately 3.77 million ETHs, just shy of the February peak of 3.81 million. Notably, the streak of inflows for Ethereum contrasts with Bitcoin ETFs, which just saw their first weekly outflows in 8 weeks, indicating a shift in institutional preference towards Ethereum. Now, this surge in ETF demand is also reflected in dollar terms. Ether-based investment products attracted 296 million of inflows in the last week, the largest weekly influx since late 2024. Now, high-profile asset managers, in particular, BlackRock has been quietly accumulating Ethereum, now holding roughly 1.5 million ETH, which equals about 2.7 billion US dollars in custody. Now, blockchain analytics reveal BlackRock purchased about $500 million worth of ETH in the past 10 days alone, underscoring strong institutional conviction. Other big players like Fidelity and Grayscale also maintain large Ethereum positions via their funds. A look on the market and on-chain metrics. Beyond fund flows, other on-chain and market indicators corroborate Ethereum's rising traction. Ethereum futures open interest has climbed sharply, indicating growing participation and confidence among traders. Over the last month, the total value of Ethereum futures contracts jumped by about 40%, growing from 26 billion to 36 billion. Now, this increase happened while Ethereum's price stayed mostly stable, which usually means that more traders are getting involved and expecting a big move soon. In fact, the weeks immediate after the upgrade, when I talk about the upgrades, I'm referring to the Pectra upgrade, recorded $100 million in ETH inflow, suggesting that technical improvement boosted investors' confidence. Now, on the network front, the usage remained robust. For instance, daily transaction counts and active addresses have held strong, and Ethereum's post-merge fee burn mechanism continues to gradually reduce supply, adding to a deflationary tailwind. Additionally, the use of Ethereum for real-world asset tokenization is picking up. BlackRock's recent custody of ETH is partly linked to tokenizing assets on chain via Ethereum, highlighting growing institutional use of the network's capability beyond just speculation. Now, these on-chain trends indicate that Ethereum's fundamentals are strengthening alongside the influx of capital. Stablecoins and tokenization boost Ethereum's appeal as well. Ethereum is gaining attention thanks to the rise of stablecoins and tokenization. Big companies like Visa, MasterCard, and Stripe are exploring ways to use stablecoins for payment, and many of these systems are built on Ethereum. Recent data shows that stablecoin transactions on Ethereum have hit record highs, showing how the network is becoming more important for things like global payments, money transfers, and decentralized finance. And one thing that I think a lot of the ETH investors are looking is actually the staking. And the hopes around staking drive more interest in people investing in Ethereum. Investors' excitement around Ethereum ETF is growing, especially as people expect that staking might soon be allowed within these ETFs in the US. A major moment came on May 29 when a division of the SEC suggested that some staking activities may not count as securities, a small but important shift in regulatory conversations. Following this, Invesco updated its Galaxy Ethereum ETF application to include staking, joining other big names like Fidelity, Grayscale, and Bitwise. If the SEC approves this move, staking could offer investors extra rewards in the form of yield in addition to regular price gains, making Ethereum ETFs even more attractive, especially for those looking for steady returns. So what's next for Ethereum? Looking ahead, continued institutional adoption could take several forms. More traditional funds launching ETH products, increased ETH holdings in treasury or investment portfolios, and broader use of Ethereum's blockchain in finance as exemplified by on-chain asset tokenization trials. Each of these would further integrate Ethereum into the established financial system. However, institutional interest can ebb and flow. A sustained risk of shift in global markets or a crypto-specific shock could slow the inflows. For now, sentiment among big investors appear decisively pro-Ethereum, with inflow streaks and asset under management growth attesting to confidence in the asset. Now, in terms of price movement, Ethereum seems poised at a potential inflection point. The prolonged consolidation under 3,000 combined with rising on-chain accumulation and bullish technical patterns suggest that a breakout is increasingly likely if external conditions remain stable. Regulatory developments will play a pivotal role in what comes next for Ethereum. Thus far, Ethereum has benefited from a relative clarity or at least an absence of direct regulatory attack. For instance, recent US securities action targeting certain altcoins have notably not named ETH, and Ethereum's underlying status, often viewed as a commodity by US regulators, has enabled the launch of regulated ETH investment products. Okay. So continued regulatory support or clarity such as Europe's MiCA framework, bringing stable rules for crypto, or the US providing more guidance on Ethereum's classification would likely further encourage institutional development. Macroeconomic factors like central bank policy or overall risk appetite are also crucial. Ethereum's rally in 2025 has occurred despite a wait-and-see climate around Fed interest rate decisions. So should the macro outlook improve, risk assets, including crypto, may see an additional tailwind, aiding its climb. Institutional analysts are thus watching both Fed policy signals and crypto-specific regulatory news as key inputs to the Ethereum thesis. In summary, Ethereum's recent gain in traction appear well-founded so far. Substantial on-chain inflows and fund accumulations point to a strong vote of confidence from the big players, while market technicals are aligning in favor of the bulls. Okay, so we have also seen this morning ETH climbing to a high of 2008 after testing to 7. Now we are at 2.8 already. So if this momentum continues, I won't be surprised that we will see it breaking out and testing 3,000 soon. Okay, so with that, that's the report for today.